Welcome back to the channel, guys. I am happy you are here. Today we're looking at ticker O, Realty Income. The monthly paying dividend stock, probably the most popular monthly paying dividend stock, one of the most popular dividend stocks overall. I am biased. I own quite a bit of this one. It is a pretty large portion of my full portfolios, and I'm happy about that. It's been doing really well, but I want to say that I do like this stock. I've owned it for a long time and it has served me well. So talking about Realty Income, we're going to go over a couple things in this video. We're going to look at the price appreciation of this stock, and then we are going to go to their website. We're going to go to their dividend history. After that, we're going to go to a drip calculator, and then we're going to go to the final calculation. All of that is timestamped down below. If you want to move around, feel free to do so. But there is some new stuff coming out with Realty Income that I am going to talk about right next, which I think is important if you are looking to invest in this company. So with that being said, let's jump straight into the first part and check out this price appreciation. The current yield, according to Google, is 5.91%. Now, Realty Income hasn't moved around too much. I mean, in January, it did do a quite big jump up to the $60 range again, which I love to see, and then it sold back off. They did a stock offering at around $56, which I think is part of the reason why it sold off, but still not terrible. Year to date, it's down 9%. Because of these interest rates, here's my take on why it's beaten down. My take is that everyone thought that this year interest rates were going to drop. And so everyone started buying Realty Income. Everyone started buying REITs. And then when the news came out, when the Fed released, hey, we're not going to be able to cut rates like we were hoping to, it sold off again. So I have not purchased more recently. I am negative on my Realty Income total, but the dividends are beautiful and I'm only down a couple percentage points. So I'm still going to hold it. It is one of my favorites. But if we look at their 5-year chart, down 24%, and their max chart up 540%. I remember doing videos when it was up 600% all the time, back when it was trading at, I didn't know it made it all the way to 72. What is this spike? 77? Absolutely insane. So now let's take a look at their portfolio and some of the good news coming out from this company. Realty Income has been under some fire lately. This company is huge. It's a multi-billion-dollar market cap, which is large for REITs. And so the problem with that is it is hard for them to continue to grow at their normal cap rate because they are so large. And now this isn't very easy to understand, the concept of it, but basically they are so huge that if they want to increase their profits by, say, 5% in a year, they have to buy significantly more properties at a better value than they would have to if they were smaller. So say a smaller REIT could purchase one large apartment complex and boom, there's a 5% increase in their FFO. For Realty Income, they would have to buy 20 of those same complexes. And it's harder to find deals. It's harder to get financing right now because of these rates. So they're struggling a little bit, and I do understand it. But they are diverse. Their portfolio snapshot, which is what we're looking at here, 15,450 commercial properties. Insane. Under long-term net lease agreements, their portfolio occupancy is 98.6. It has come down a little bit. I believe it was 98.8 or 9 last time I did a video on this. So it did drop a little bit, but that's an insane occupancy rate. 1,500 different clients and 89 separate industries, which that is key. You want to have money in everything if you're going to be a REIT, because you don't want one thing taking a hit and then boom, struggling. So I do know that they are expanding their properties in the UK. And this is one of the big news things that came out. They got some great deals on some great cap rates for some properties. And oh, they have 22 properties in Hawaii. I didn't even know that. So I'm glad to see this, the diversification and what they're in. They really are in tons of stuff. 7-Eleven, Chipotle, Lowe's. Insane. Asset overview. A lot of this, you guys can check this out on their portfolio for yourselves. And then I want to jump into this press statement, this press release. You can check all this out on the website for free. They have this. And one of the main things that I'm really happy with Realty Income about is they increased their guidance for 2024. So they, based off these deals in the UK, they are expecting to do better. They believe that they will have better results overall. Better adjusted funds from operations going from, let's see, they only bumped it up by a couple cents. And so it's not like they came out with, we're going $1 over what we anticipate. It's going to be insane. They just said that we think we're going to do better than we were going to do. And so that is definitely a good thing. It's a good good note. So we can see it was $1.23 on the lower end of their prior guidance for 2024. Now it's $1.26. The high is still the same at $1.35. And so just good news. It's nothing insane. This is not like a, break the internet kind of thing, but it is really good news from this company, and I'm excited to see what they're going to do next. I've seen a lot of beautiful dividends on this channel, a lot of beautiful dividend histories, a lot of good money. Realty Income, just look at this, 3 years, beautiful, from 23 cents to the current 26 cents. 5 years, 5 years of those monthly dividends, insane. They are a dividend aristocrat because they have 26 years of consecutive dividend growth. 10 years. Look at this. 10 years from 18 cents to 26 cents. Not the most insane growth, but still just consistent. That's why I have this one in my portfolio. And people, I recently got comments, you're an idiot for owning Realty Income. And I was surprised by that because I thought everyone liked this stock, or I thought people at least understood why people own it because of these consistent dividends, right? But someone's in my comments and he's going, oh, if you match this against just like QQQ or VOO, then it underperforms. And so what I did was I pulled it into a drip calculator, and that was not true. Except VOO is a newer fund. It has done better in the last like 15 years compared to Realty Income. But any fund, I've yet to find a fund that you match up, a dividend fund, I should say, that you match up against Realty Income that has outperformed it for the lifespan of this stock, because this thing just, it destroys the max. Absolutely insane. It's just beautiful. They started paying at 7 cents a share. Now they're up to 26. And we can go down and see that they are increasing it just a little bit. It doesn't show it exactly on the chart, but they increase it by a very, very small amount, less than a cent per. But this is month to month, so they're paying a lot of dividends. So 2023, they went from 24.85 cents, and now they're at the end of 2023, they're at 25.65 cents. So they're increasing it by under a penny per year. But that's a lot for a company of this size and with this growth. So yeah, 5.91% dividend yield. Payout ratio, not as important with REITs, but no, it is important. We have 73.8%. PE is not as important with REITs. You want to go off of FFO. Annual forward payout is $3.15. Checking in their dividend growth, yeah, not great. Their 3-year, 2.28%. Or 1 year, fiscal year, 3-year, 4.21%, 5-year, 3.55%. And so this is the argument people have against Realty Income. They're not growing their dividend like they could be. It's a 6% dividend yield. It's hard for them to grow it. I think the UK properties are going to really help with that. And if they can keep getting these good deals, and if interest rates come down, I think Realty Income will really start to outperform once again. And until then, I'm getting 6% on my money, and the price is trading relatively sideways. So I'm not complaining about that one bit. Jumping into the drip calculator. This is always fun. I always put stuff up against Realty Income to see how it could do. But let's just do Realty Income versus the S&P 500. I'm a huge proponent of the S&P 500. I own 1 share exactly. And beautiful. They've both performed extremely, extremely well. Like, let's start with that. These are 2 amazing funds, 2 amazing stocks. Starting out, we have with dividends reinvested, which was the power for Realty Income. Another part of the argument with Realty Income is reinvesting the dividends back then would help you a lot more than it would now, but we can't tell that. We don't know what the future is going to hold for Realty Income. But $10,000 invested in 1995 would net you a return rate of, where's the percentage? There it is, 2,782% compared to the S&P 500's or SPYI's 1,445%, which is still phenomenal. I'm not arguing against SPY. Like I said, I own it. I love SPY. And then we see that we have a starting investment of $10K and ending investment of $288,000 over this insane time span. And SPY ended with $154,000. Man, I can't talk today. 2 great returns. When you don't reinvest dividends, it's really close. SPY ends up coming out on top. Smaller dividend yield, more growth for SPY, so that's what we would expect. And you see still insane returns of 900% and 1,000%. And we can even see Realty Income was on top until this latest dip. So it's just a very performative stock. It's been doing really, really well, and I'm a big fan of it. So let's run the numbers and see how much money it can actually make you. Putting all the calculations in, 10K invested, 5.91 return rate. This is not including price appreciation. which normally when I'm doing these on like the yield max funds, I would say is a bonus because they might go down in price. But when you're looking at realty income, I think long term the price is going to be bullish. So you may get more than this. You may also get less if they downtrend. But you're going to make $591 your first year with your 10K invested, which is pretty insane. That's a really beautiful rate. I love that. Let's go to 5 years invested. After 5 years, you are now getting $743.59 in dividends every single year from your money. And your total return so far is $3,325.54, which is great. You're looking at a 33% return in the span of 5 years. Maybe a little bit low to some people, but it's a it's a safer option than what people are used to. And now we're really going to get into it. A 10% return, you'd be making $1,000 every single year from just the dividends, and they're paid out monthly, which is amazing. Total returns $7,700, which, again, beautiful. We're used to some crazy numbers when we're running these, but honestly, consistency and good returns in the market are what we're looking for. I would expect this to do better with price appreciation as well. After 20 years, you're now making $1,700 every single year from the dividend, and your total money made is $21,000. So if we backtrack up here, you are breaking even at 13 years, well, closer to 12. At 12 years, you've now doubled your money compared to what a lot of other stocks wouldn't be able to do. But now we're really going to get into it with 30 years. Say you're 25 right now, you want to retire at 55, and you want to retire off of these dividends. With 10K invested, you would now make $3,124 every single year, and a total amount made of almost $46,000. Definitely not enough to retire in. That's the thing with these ones when you compare them with the yield max funds, with the NEOS funds. They're not going to pay as much of that insane dividend as we've seen where you're making $1 million a year after 20 years. But this is going to be consistent. It's going to be safer, and it's going to just downright perform well, in my opinion. So that's what I'm hoping for with realty income. It's great. You end up making $46,000 over 30 years off a 10K investment, which is stunning. And again, with price appreciation and dividends reinvested, like we saw with the drip calculator, it's really important to note that that could even boost this. You could have doubled these returns pretty easily, especially if you're reinvesting that money. So let me know what you guys think in the comments. Let me know what stocks you want to see a video on next, because I'm curious. I'm running out of some ideas of my own. I'd love you guys to put a comment down there on what stock you'd like to see a video on. That helps me out a bunch. I hope you have a great rest of your day. Thank you for tuning in, and I will see you in the next one.